BIS Commodities with our closing weekly comments. Let's start out by taking a look and see where we closed on some of the major ag markets for the week. Start out with the grains. December corn closed 17 cents, just shy of 18 cents lower on the week at 338.5. November beans closed 36 cents lower on the week at 9.85. Beef wheat was down just shy of 33 cents at 502.5 on the week. Livestock markets, cattle was down in the October contract, $3.18 at 156.57. October hog futures closed was the winner this week, up 17 cents at 105.80. The dollar index continued its upward climb up to the dollar index. Looks like it's going to trade somewhere around 84.3 points this week. So the stronger dollar did make multi-year highs and putting a little pressure on the commodities as a whole as the dollar commodity trade takes place. The big news item this week in the grain markets was obviously the monthly supply and demand report, and how big a crop were we going to receive from the WASDE this week. Taking a look at the estimates, pre-trade guess on the corn crop was somewhere around 170.7 bushels an acre. We did get a number of 171.7, larger than expected. That's up from the August report of 167.4 bushels. That gave us a total production number of just shy of 14.4 billion bushels of corn. That gave us a carryout for next year of 2 billion bushels. If realized, it'll be 20 plus years since the last time we had a 2 billion bushel carryout in corn. Long ways away yet. But that is the numbers we're looking at the moment. And soybeans, we did get a larger than expected estimate from the USDA or the WASDE as well on the bushels per acre. We pre-trade guesstimates, we were looking somewhere around 46 or so bushels per acre. Beans came in at 46.6. That was over a bushel higher than the August report at 45.4 bushels an acre, and that gave us just shy of 4 billion bushel bean production number at 3.913. A very large number for beans. That did push our carryout up as well, up to 475 million. If realized, this will be the largest carryout in soybeans since 2006. The wheat numbers were also bearish, larger ending stocks than expected there, as we had to revise exports down. That could weigh in the corn market as well. One thing to take a look at from this point forward is if we have a big crop that continues to get larger, we're going to see probably a very tight or a range-bound grinding-like trade to take place. In years that we had big stocks-to-use ratio, which as of right now is projected to be, the lows were seen somewhere around the November time frame. And other years, if there's any correlation we can draw from that. So that's something to keep in mind as we move forward. Also, we did see basis breaking here late this week in Cedar Rapids, as some new crop corn is starting to find its way into the supply, or there's some give-up selling taking place by the producer as well. But we are seeing some weakness show up in that premium for an old crop corn, as well as old crop beans. The premiums are starting to back off here locally as well, as maybe some new supply is finding its way into the system. Looking at the livestock market, cattle futures were weaker this week. We did see the boxes trade fairly steady. Big up day on Monday, a grind steady the balance of the week. Cash trade has been very limited to this point, unless there is a large cash trade later in this afternoon. But there was some light trade in the Corn Belt at 156, 157. Looking for a stronger cash trade in the South, yet to materialize at this point. If we do see a light cash trade this week, that could put a little bit of pressure on next week. Maybe the show list maybe the show list will grow next week. Technically, we did close down on the week. It was a week technical close for the cattle futures market. But again, cash has been the show so far this year. We'll see how cash finalizes up the week this week. Hog futures, pretty much steady for the week. Very volatile, choppy week. Just nothing unlike the cattle futures. A volatile week as well. The difference is the cash market for hogs held fairly firm and ground higher through the week. We did see the pork cutout continue to grind. The Iowa-Minnesota cash cutout pushed higher as well. We were able to close a little bit higher in the week, but it was a fairly steady week, very choppy, volatile week. Take a look at the big inverse in the hog futures from October to December. Quite a spread there. The market's telling us they want hogs now. There is some talk coming into play that maybe the production numbers are set to increase through the the fourth quarter of this year and into the first quarter of next year. Something to keep an eye on. Obviously, again, the market's telling you to sell your cash now. When you take a look at the cattle market and you see the December futures floating around up there in that 160-61 range for any unhedged production, it's certainly an opportunity to get some type of protection or hedges in place. If you have any questions about these markets, these livestock markets, or anything about the report this week, feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.